Wharton School professor Jeremy Siegel here with us to get his take on stocks as we head into a new year. Good to see you, Professor.
Good to see you.
We are. It's David, actually. We're coming off
yes.
2 great years for the broader markets. Can we make it a third in 2025?
We could, but I think if you look at history, I think the only other time that we've had 220 pluses go into the third year was 1999, and whoa, then we got way too overpriced and we got to 2000. So I really think we're going to take a pause this next year. One thing is true about the markets, as an old saying, is that whenever everybody expects something to happen to the market in the future, it's not going to happen. Everyone expected that, we're going to have the Santa Claus rally. Everyone said, oh, yeah, it always rises between Christmas and New Year's. And I warned a few weeks ago, I said, yeah, when everyone says that, they buy up before then, and then when it comes, there's disappointment. And, I think maybe we're seeing a little bit of that right now.
Yeah, right now. Okay, but does that apply to 2025? Is there an expectation, perhaps, that we're going to have another strong year and therefore going to be disappointed?
I think there might be some disappointment. As time has gone on, I think the probability of a correction next year, which is defined as a 10% drop in the S&P, is getting higher. I'm not saying it's a sure thing. Nothing is a sure thing in the market. But the major forces to propel things upward, I think, have already been built in. We still have, we talk about 22 times earnings on 16, 17% gains of earnings, which is, also far higher than historical. So I see a little bit more risk on the downside, and I'm a bull on the market. I'm long term. I'm not saying sell, but I see more risks. Not as optimistic as Tom Lee was right at the end of Squawk Box, and I admire him dramatically. But I think that we have challenges next year because of all the optimism that has been built in this year.
What does that mean, Professor Siegel, for the long-standing reign of big tech? One would say those have been some key forces over the last few years that have pushed the broader S&P 500 upward.
Yeah, and we do still have a bifurcated market in the sense that the Mag 7 being 30%, Mag 7 being 30 to 35 times earnings. The rest of the market 18 to 20, which is much more reasonable. I think 2025 could be that switch around. Now, of course, many of us thought that would happen 2024. That didn't. The narrative of AI is still very, very strong. The spending is there. It's going to bring about all these gains. Now, the amount of actual gains it's bringing about is modest. It isn't. It hasn't been implemented completely at so many firms. The hope is there. And I think ultimately it will prove to be very beneficial, but there is room for disappointment at the speed of implementation and how much that actually will affect profits. Now, will it happen in 2025 or not? Listen, history tells us that narratives go on much longer. They need to be punched down with many failures before they're finally dead. At this particular point, that trend is in. But I'm looking at January, thinking, hey, that might be a reversal. That big buildup that Mike talked about, that we got from Thanksgiving up until a week ago in the Mag 7, we really might find that revert at least down to the trend line that was established, in September and October. So we might see a reversal earlier. And then we have the challenges that Mike and everyone has been talking about. What is going to happen to tariff policy? What's going to happen with immigration policy, et cetera, and so on. I mean, there's a lot of positive aspects. We also have to remember, in terms of, we see the Republicans did capture the House, but by 1 or 2 votes. Some of the things are not going to come maybe as easily as everyone thought on November 5th with the election. I do think they're going to work on the taxes and get that set in the as an important priority, certainly in the first 2 years of the Trump administration.